I'm doing a simpleton look at the gold market using the current fractal technology of the trend line. Okay, this is what I'm thinking. Come in here. This is so top becomes bottom. See what I mean? Okay, here's the concept I'm relying upon. That once penetrated, the support level may act as a resistance level. And the same thing would be true in the other direction, that the resistance will become support. The penetration part I don't know about, that's kind of naughty. So here's my support, become resistance. And that's on an angle. That's on an angle. So that's kind of a velocity one. Now here's the linear one here. Around 975. I'll just say 975, make a nice easy number to remember. 977, just below 1,000. Big buyers there. Then I'm keying off this fractal on the top, using equidistance on close on the monthly. And I'm dragging this around to the rollover point. Right here, this bottom comes at the top. So on the way down, and then there's an internal one here. I suppose it's like an Andrews pitchfork, but the fork's a little bent. Of course, the market starts to bend here and take a different cant, different skew rate. So just key it off of what it is here for the top, bottom, and then do your channel, top channel up there. So it's overlapping channels as it starts to fall down the slope here. And then so this is the monthly here, and in the right view mirror, this is the left view mirror. This is like your rear view mirror, and this is the what's coming at you. Over here, I can do a channel, and then find the rollover here as the top become bottom, 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 and then the question here would be: are we going to continue down the rabbit hole? If I zoom out to the zoom out here, and then you know, you've taken out this support, and the support become resistance in the down world here. That's the question. I lost my power. Keep losing the power here. Grid's going down. I have a 25 pip grid over here. So this is a low risk entry down here. Start buying at 1100 and just buy all the way down, or just buy around there, pretty heavy for scalps, and then I start scaling in here, come in here, basically looks like this over here. You're gonna buy this retest, certainly buy there at the top bottom theory. So as you're walking up this hill, you're getting like this situation here. Top becomes a bottom is this theory in just the most linear manner, where you literally have a precise top bottom. Of course, once the market goes into a velocity mode, a speed mode, then you can start drawing them like at an angle on close. So it would start to look like, let's see here. Okay, here's now once it starts to cross over, you'd be trading the crossovers. You have to zoom in on that. It's not really doable at that density. But for instance, here would be your pivots on the velocity. So in the up world, it looks like this. Or here's your crossover. So here's your top bottom. I'd probably look for the fractal off of this one. Key this one here, and then drag this equidistant around till you find the rollover. So here'd be your pivot. Let's take all this crap off here. Just so as for instance, all you know is this. You just know this bounce velocity. You take this section down here as your key point, and find the high in between, and that's going to be your rollover point. So on equidistant, it's kind of no-brainer stuff. I mean, the market's moving around it, so you're and then of course if you want to go for the linear, you're looking for this situation to show up on the chart, so you can enter here at the lowest risk and put your stop back here. So on this chart, the instance would be here, where you have this top becomes a bottom. So here's a situation where your top bottom is a little skewed. You can find another place to hang a bottom off of, so you can, but you're having a velocity bottom as opposed to a linear. Like here's a double top becomes a bottom. And if you turn on the candles, you probably would have got filled if you had your order resting. Apparently not, but if you had your order resting, say on just the close only or handles, so you have a buy order there, and then there's an internal top here, which is a better place to put your fatter ticket, as in the internal, which is kind of this little part here. They didn't draw it on here, but see the internal, this top becomes a bottom internally. So it's the ribs, the rib cage of the beast, as opposed to the big bones and the real obvious hip bone. And then here's your channel. You would have to base all your trades along this channel so that you could exploit all the, of course, see the narrow channel that rides along the shoreline here is the low risk window. So if you're in this one, say right at the moment in this is gold daily, so there's a narrow channel here off of this double bottom. So this is your see how tight that is. Now this is like Andrew's pitchfork, but it's kind of like a channel envelope, an equidistant channel envelope. So you kind of try to find your band of low risk entry along the down stairway. I don't like to wait for confirmation. In other words, if this is one of the steps on the stairway, I certainly don't want to be getting in here. And I see a lot of people getting in there on moving averages in their Ikamushu cloud, but to me that's a little late. I would like to get in at the this critical thing. You're coming up into this channel here. Now the next step is starting to think about, okay, are these going to be possible? Just whatever you can afford to risk. You'd start to plan the break of this trend line, but you kind of want to get in before it breaks. Take something off the table here, and it just happened to close right at this key support level right here. So now we're flirting with this becoming resistance at this point on the way down. And will it continue going down? I hope so. I hope it continues going up and down, because there's so many ways to trade this thing to Tuesday that it's ridiculous. So here's your triple bottom becomes top if this can come back up into here. So a lot of sellers will be coming in here. So for the short time, definitely going to be sellers all sitting here at this line because they thought that was the bottom, and they all bet the ranch at 125. They're going to be looking to cover. So based on this theory here, where these people who about losses. So they want to recover their losses, and it's all about, yikes, you know. And most people are happy to be even, you know, because that's what they've been taught, just to get even. But as we go down here, so you could make the argument for this being the head of a shoulder, of this starting to walk its way back up into, but it's certainly fun to watch the market go into these extremes. You know, just can't believe it hardly, but there's the monthly. So that's my story. I'm sticking to it.